Should I set up a trust to save me on taxes? This is a common question, common misunderstanding. You may be surprised by the answer. I've got what it is, what it's not, and whether it helps you on your taxes. I've got that and more coming up. Should you have a trust as part of your overall financial structure, maybe your estate plan? Do you need a trust? Get this question a lot. They're somewhat mysterious. And oftentimes people can feel like, well, don't I need a trust? I've saved up a lot of money. We've got, maybe $1 million net worth or a couple $1 million, and I'm hearing other people say that they've got a trust or whatever. Do I need one? Maybe you've even stayed up too late and saw an infomercial. Do they still have those? Or maybe you heard from an estate planning attorney, or someone reached out, sent you a flyer in the mail and say, oh, you need a trust and blah, blah, blah. Well, knowing what a trust does, so what it is, what it isn't, and when it would make sense to use one can actually save you thousands of dollars in legal fees. And all of this is baked within your estate plan, but it's connected to the other areas of your financial life. Estate planning is one of the 6 areas of your financial life, but you can't make that decision in a vacuum. Because if you're just looking at your estate planning and you hear, which I'm going to share in just a moment, what a revocable living trust is, what the benefits are, you might say, well, yeah, I need that, without knowing whether it makes sense and brings synergy to the other 5 areas of your financial life. This is where working with your certified financial planner, they're not a legal expert. Likely they're not a lawyer, they're not an estate planning attorney, but they do know your financial situation, and they can collaborate with the right trusted partner, the right estate planning attorney, and determine, well, what is the right approach for your estate plan? Do you need a trust, and what are the benefits? So what is a revocable living trust? And by the way, how does it differ from an irrevocable trust or irrevocable trust? A revocable living trust, it's revocable, so you can change it at any time, but it is basically a structure, an ownership structure of a set of accounts, of assets, okay? It's a legal arrangement where you transfer ownership of certain assets, so an account, a bank account, maybe your house or other assets, into the ownership of this entity, of this structure. And you do that all for the benefit so that a trustee or an individual, stated individual, can manage and oversee those assets during not only your lifetime, but even a prolonged time period. So think of it this way. It's like a folder on your computer, okay, that you can drag and drop documents or assets into, and the trustee can make changes. It's revocable. They can change it. You can take assets back out of it. You can take files right back out of that folder. You can change the name of it. You can change who has access to it. A lot of it is very changeable. That's revocable. So why would you do it? And is one of the reasons to get some sort of tax benefits. Well, let me tell you what a revocable living trust is not. Unfortunately, it does not help you reduce your taxes. This is not a tax shelter account like an IRA or a Roth IRA, 529 plan. No. I often, if you hear us talking about your tax shelter strategy, we'll often say, your tax shelters like your 401k, your Roth IRA, those sorts of things, or your non-tax shelters, an individual account, a joint account, or a trust account. Having an account placed in the ownership of a trust does not grant you some tax benefits or does not make it a tax sheltered account. The dividends and capital gains, the interest, all of that from that account will still land on your tax return. If you sell an asset, maybe you put your house or a vacation home into a revocable living trust and then you sell it, there unfortunately are no tax benefits. It also is not an estate tax shelter. That's the second most common misconception. Putting assets into a trust, if you've got significant assets and are threatening having to be subject to estate taxes, which can be excessive and a very high tax rate, above and beyond income tax rates and so on, putting assets into a revocable living trust where, again, you have control over what assets go in, what assets go out, what you do with them, that does not give you estate tax benefits either. And lastly, a revocable living trust typically does not protect those assets from creditors either, because you are still likely the grantor, the trustee, you still have control and authority over those assets. So typically, there's no creditor protection. And the final thing that the revocable living trust is not, and this is kind of stating Captain Obvious here, it's not irrevocable. It's not irrevocable, meaning because it's revocable, you can make all these changes. That doesn't mean that, well, you get the same benefits or features of an irrevocable trust. An irrevocable trust is one where, no, you have no control over what goes into that file and what you do with those assets. You've given that authority over to someone else. And when you do that, you've lost control, you've lost authority, you've lost direction. And in that case, there may or may not be some tax advantages, and it could have some protections from creditors and from estate taxes as well. But most people are setting up a revocable living trust because they still want to retain control. They're not ready to give control of their house and other assets to a different entity, different person. So if a revocable living trust is not a tax shelter, it doesn't benefit you on your taxes, what does it do? Well, it's a couple of things, and a couple of really important things. One, it can help avoid probate taxes. And I say avoid, sort of hesitant. I mean, in order to have the benefits that the revocable living trust offers, you do have to put files into that folder. You've got to put assets into the trust. And this is part of the implementation of your estate plan. Many people, they'll set up their trust with an attorney, but they never transfer ownership of bank accounts or investments or their homes or property into the trust. And therefore, those assets, when they pass, still would go through probate. But any assets within the revocable living trust do avoid probate, so they avoid that cost, and it's a much more efficient transfer of assets. Because of that, revocable living trusts are ideal if you own property in multiple states. You don't have to, say I live in Indiana. If you also own a home in Florida and you pass away, you'd have to do probate and open up an estate in both states and travel, and it can be very costly and frustrating. A revocable living trust removes that necessity, right? If it owns property in multiple states, you don't need to probate in multiple states and open up an estate there. It creates privacy that going through probate would not. Your trust and everything that it owns, that's all confidential and private. It also, and this is another major benefit and a major reason why people use revocable living trust, if you have minor children in a trust, you can list, well, who would be the trustee after you? Meaning if, so we've got 3 young kids, if Cindy and I both passed away, well, the assets would just go to the kids. And as soon as they turn 18, their guardian would basically have authority over those dollars for their benefit until they turn 18. And then when they turn 18, all the money's theirs, right? In a trust, revocable living trust, it can you can have direction over the dollars beyond your life. So we've got ours listed where it says, well, the kids would have access to some of the dollars for certain reasons, but they wouldn't be able to get their hands on the bulk of the dollars until certain ages and certain conditions are met. You can do that with the revocable living trust. You can't do that without that type of kind of structure. So that's what a revocable living trust is, what it isn't, and why you would want to use it, what some of the benefits are. So, in your situation, do you own property in multiple states? If so, maybe it makes sense to work with your CFP, collaborate with a qualified estate planning attorney, and look at setting up a trust. It does create some complexities, but if you have property in multiple states, it may make sense to do that. Do you have minor kids? And while you've got minor kids, are you in the wealth accumulation and wealth building stage? If so, you may want to consider looking at and opening a revocable living trust. You got to be mindful of life insurance as well and so on. So work with your certified financial planner and a qualified estate planner as well on that. But if your estate is very straightforward, you don't have minor kids, you don't own assets in multiple states, and a lot of your net worth are in assets that have a named and listed beneficiaries, those rules are often going to govern, and you don't need to add the complexity and the cost of a revocable living trust. So, work with your certified financial planner. Estate planning is one of the 6 areas of your financial life, so make sure they're certified and they're doing comprehensive financial planning. They can collaborate with you about the types of options that may make sense for your specific situation, and then work with the qualified estate planning attorney to ensure that the right documents get drafted and implemented. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.